Good evening, ladies and gentlemen. With just little over a week to go with earnings season, I want to talk about some things that I've noticed about the state of the markets, why some setups are working and why some are not. And I'm talking about really good setups as well. And I'll talk about the adjustments I've made to my trading and how it's had a significant impact on my P&L. And hopefully you guys will have something to take away and improve on your trading and hopefully have a positive impact on your P&L as well. Keep in mind, not a financial advisor, yada, yada, yada. So we have CKF today as an example of a stock that I talk through with my community about expectations of what should likely happen. And it wasn't right off the bat, it wasn't match trading or anything like that. The discussion happened at this point in time here. As the stock had sort of stopped, developed its range, it's obviously that the top, it trended one direction, bounced. Great, we have some kind of range. Comes back to retest, double bottom, comes back up, fails to even hit VWAP. Okay, at this point in time, I'm expecting a rollover. There's just so much weakness in the stock, it can't even get to VWAP this early in the morning. The idea is to begin a short for myself and anticipate a range break. Now, there is a second criteria to this, and that is how much it's moved for the day, right? The range, not just the range, but rather the gap that it had. Okay, it's gapped 7, and when it bottoms out, it's a 13% mover for the day, right? It bottoms out at roughly negative 13%. So as the stock is approaching lows here, the idea was to watch for volumes, and a classic trade setup would be to short here at 780. And you get that briefly, but then you end up with just a move to the upside and towards VWAP, which for this setup, which is what I would consider my bread and butter, for this setup, it's been happening quite a lot. The call was, and this is today's trade, the call was that it would be a scalp for myself, right? Because I don't tell people how to trade or what to do. I'm simply announcing what I plan on doing as it's happening in real time. So the call was I plan on starting a short in anticipation of range break, build the short as it comes down, and for the breakout, of course, break, retest, classic stuff. But then it sort of just holds this level here and doesn't continue further. So my call was prior to the breakout was this is going to be scalpy, right? Typical classic trade would be breakdown, a breakdown, retest, breakdown, classic. Now, something's happened in the last couple of weeks where that setup is no longer working. And ultimately, the conclusion that I've made is any stock gapping more than 3% in either direction is having failed range breaks. They're simply not breaking range and performing as expected. And in this case, it exactly happened as I expected. It would be a scalp. It just barely moved 10 ticks, right? Maybe 12, 13 ticks at most, but realistically, it's about 10 ticks. Had to scale out very quickly after this range break happened. So why is that? Well, ultimately the change in what's happening in the markets is it feels like things are getting oversold. And then once a breakdown happens, it just tends to reverse. Now, what can happen and what has been happening lately is it would create a higher low and then bust through VWAP and then kind of go sideways and then it would mess around. Now, sometimes it'd be a big fake out, and I'm talking a big fake out, like really clearing VWAP with high volumes and then puking, right? Puking much later on, which is very unusual outside of this earnings season, right? That is not typical of what happens on these kinds of plays. What you end up seeing is VWAP is acting like a magnet. And it's very unusual and very choppy. As you can see, it looks like it's going to swing to the upside, fakes out, retests VWAP, which I know so many people would A, be shorting here, and B, be going long here because they expect a rejection. That rejection doesn't happen. There's a breakout, retest, continuation. Doesn't happen. So that's double chop, and then it starts going to the downside. And then it just keeps chopping. And then it only starts to resemble a normal trade once it gets to around lunchtime where there's low volumes, less volatility, and it just hits VWAP nicely and comes off. But really, my trust with this stock was long broken. And, you know, my trust in these setups are long broken since like a week ago. So this is very typical of what I'm finding is happening. And in fact, a lot of these trades would also result in just straight up pumps above VWAP as well. So VWAP reversals, or reversals through VWAP, I'd say. And they don't even tend to retest highs or anything. They just do exactly this. They kind of just linger in the middle of nowhere and then kind of come off. It's kind of unusual. So you might be thinking, wow, Demon, you must be going long once these range breaks happen. It's like, no, that's not the trade. The trade is to be scalpy and to figure out which setups actually work. And to give you another idea of what's been choppy lately is, here's A2 Milk gapping down 20%, right? 20%. One would expect, it's 16% ends up at a range of 24%. So 16 to 24% just in the first candle. Now, you can see just from the first minute what happens. It trades the entire day within half the range of the first candle. It's insane. So your biggest price action is in the first candle. And I'm not going to sit here and tell you that the order book was good enough to trade the match either. So just really shitty trading, right? So when one expects a 15% gap down, one expects a bit more volatility beyond the 1, 2, or 3 minute candle. One expects a little bit more, both in liquidity and volatility, but it just doesn't end up happening. So what did work? Well, one example is IAG. Now, obviously this doesn't work perfectly, and the reason is, we'll see later on, is that it does end up going a little bit through VWAP with some strength and then coming off and rolling over. But you know, this is quite typical of what's been happening. VWAP's not being respected. It pops through, fakes out, reverses. But point still remains, it's still a very sensible trade. Now, IAG had earnings. I don't recall the numbers, but it doesn't matter. It seemed like a stock that should have gapped. And the fact that it didn't had me really interested. This was a call that I had in Discord as well, to really pay attention to IAG and wait for the range break setup. I believe the range was more like this, but either way, breakdown, retest, sells off. Now, in terms of the amount of ticks that this stock had, not too much. Ended up going from around 38 to 23. So 15 ticks. Not the biggest money maker in the world, but you know, it was a clean trade. Unfortunately, this one I did end up getting cut up. I did expect a wick through VWAP. That was my adjustment. So I did end up shorting this stock at 733, 734. End up closing it as it hit 736. And as it hit 736, as it was pulling back, I decided to start scaling out, effectively taking about maybe a 1, maybe 1.5 tick average loss from this trade here. Because, you know, I don't know if this thing retests and goes up again. I don't know. There's just the state of the markets as it is. It ended up working out, but, you know, ended up closing instead. But that's fine. Managing the risk. Not too upset about that. But the criteria for these setups to work and what has been working is ultimately stocks that are range breaking without significant gaps. I'm finding between plus and minus 2% for the gaps are the most reliable trades during earnings season. So I know a lot of you guys have been trading these stocks that are gapping up 10, 15, 20%. And I know a lot of you, if not all of you, are struggling to make some money out of it because the technicals just don't seem to be making sense. And that's largely due to the gap down. And it was interesting to read the Substack for Austin Mitchum, that sort of reinforced that idea that large gaps are basically untradeable. Sort of paraphrasing that there, but his take on the large gaps, I guess, reflect my own as well. What I've observed, that there's just very little money to be made in that space. So I'm glad there are other people that I can sort of read their views of the markets and have it sort of confirmed, and seeing that they're struggling with the same aspects that I'm struggling with, and not just some sort of fucking skill issue, right? So what else worked? Well, speckies. Speckies are working just fine. Here's DUN. This one was a stock that was sitting at about 2 mil market cap prior close, and ended up opening at around 4.2 mil market cap. It ended up having a end of hole 1 meter hit for 9 grams a ton. Now, ultimately, you look at that and you just go, that's not particularly interesting. But it is a 2 mil market cap company. And that, for me, is enough, right? If I have a 1 meter high grade hit, it's probably going to move. Would it move if the market cap was already 6 mil? Probably not. But when the market cap is 2 mil, it takes very little for a stock to move. So also we have the recent history, because this is quite significant as well. We just load up DUN's daily chart. We can take a look at the volumes that it's had recently, and you can see, yeah, it's been on a big sell-off. You might be worried about resistance, but where's the volumes? The last volumes were here about 2 years ago, and they're all in this range way up here in the 30 cent, 40 cent range. So in terms of actual, supply that exists recently, it's effectively zero. And we can just get rid of that candle, and you can see just no volume spikes, no news announcements to really cause trapped baggies. There's little spikes here and there, but they're very, very tiny. So ultimately, no resistance to the upside. And so it's a 2 million market cap stock with a terrible announcement. I agree, 1 meter of high grade of gold, who cares? But the fact that there's no historical supply, and the fact that it's 2 mil market cap, led me to believe this was going to be a pretty significant mover. Now, in my mind, I was visualizing a trade to get to about 8 cents. And if it gets to 8.5, you guys know the rule, 8.5 basically attracts a 10-cent magnet play. But I wasn't hell-bent in this market to go, you know what, speckies are hot and we should really be targeting 8 to 10 cents. It was just a expectation that it was probable, and probable sits around maybe like this 20 to 30% likelihood range. So, that was me more mentally prepping to hold this trade as it was chopping its way to the upside. And it was quite choppy, good volumes throughout, but the spread was about 3 to 4 ticks most of the day. So a very clean, well, not very clean, but it was a very nice trade. It's not very easy to see on the 3-minute chart. I wish I had the 2-minute chart to really show you. Here we go. Okay, apparently I can't do 2-minute charts. Brilliant. So effectively, this was on the 2-minute chart. It looked a lot cleaner. It's like 1 wave, 2 waves, consolidate, and 3rd and final wave to the upside. I know it looks a bit shitty on the 1-minute chart, but that's effectively what it was. It was 3 waves, both in regards to volumes, and volumes. So that is a classic spec play. So turns out speckies are still okay. I think everyone who's a spec trader that doesn't trade large caps and mid caps, particularly around earnings season, have just all been waiting around to trade something that's a micro. So you kind of add those 3 factors together, the fact that everyone's looking for a micro still, and there hasn't been recent opportunities, no historical supply, 2 mil market cap, fantastic. Like, this just kind of ticked all the right boxes, plus low shares on issue. It felt a little bit too low, I think it was sitting around 80 mil, and that's why you ended up with a bit of a spread. That's why I ended up with this little wick down through VWAP on absolutely peanuts of volume, because the spread was so high and the liquidity was, the book was just not very liquid. So that kind of explains all that. But in the end, it was worth holding on to and swinging it for the classic 3 waves. Now, I don't like using the word Elliott waves. I don't think that's really relevant or necessary. You know, there's like 5 waves, and inside the 5 waves, there's like 3 waves or some shit. Like, I don't buy into that shit. Intraday has 1 push with volumes, right? It just chills out here, pops, 1 wave, pulls back, 2nd wave, consolidates, 3rd wave, or 3 moves if you want to call it that. That's a very, very typical move for a catalyst announcement for a specky stock. So it's good to see that it's still working, albeit incredibly difficult to trade. I'm not gonna lie to you, bro. It was a hard one to trade and hold on to, but it's good to see that something worked out. So that is my take on the state of the markets at the moment, and I hope you guys are doing all right in this earnings season and making some coin. I'll catch you in the next one. Peace.